Our impact in terms of the National Flood Insurance Program is just about to hit $1 billion in claims paid across the states. In Irma, $850 million of that is here in Florida across 28,000 policyholders who file claims with us. I think we've seen a really good progression in terms of the customer service that people have seen, in terms of the speed to pay those claims and get dollars in the hands of people so they can recover. I think, as you guys know really well, you have to deal with the building industry about how quickly you can actually put it all back. But for us, we have this opportunity to make sure that those dollars are there. So the line is there for us to understand price points. The difference between being just inside and just outside the line is almost negligible, right? If you're just beyond that line, you may not have the mandate to buy insurance, but you need insurance. So in Harris County, around Houston, 70% of my policies are in that moderate zone where people chose to buy insurance. And we saw the power of that play out. 60% of my claims outside the high hazard zone there. I think that's true in these areas of Florida as well. It's flat. When the water comes in, not only do we do a surge, but we deal with ponding here and the need to push that water out. People want to pay attention to the map, and that influences how people have to build because it becomes the local ordinance, and it does impact who has the requirement related to their federally backed mortgages. But you look at the average costs. If you're just outside that area, we're going to give you a preferred risk policy. That preferred risk policy is cost about $490 a year. But you look across the area here in Florida, we've now had Hermine, Matthew, Irma. The hurricanes keep coming. And while I would imagine that people here would just like to move beyond and go, surely we get a few years off. That's not the way it works. And I look at this open coast part of Florida and go, there are very real risks. They could play out this year. And so if you're in the highest hazard zone, yes, I want you to have flood cover. And if you are in that moderate hazard area, you need cover. As a federal government program, I'm going to defer to the states and locals about when and how that does. But let's use the Keys as an example, because I walked through Marathon and Big Pine Key just a day after it was reopened to go down. There is a bright line that distinguishes homes built, say, after 1985 and before. If you were built over the last 20, 25 years, you were built higher and stronger. And when the water came in, you lost your grill. And if you were built earlier than that, it was a very different world. And those were the homes, those were the slab-on grades. And so as I look at the impact across the Keys, what I know is the folks that are rebuilding higher and stronger in a way that when the storm surge comes in, they can withstand it. Congress demonstrated this past year that when there are catastrophic events, they will step in and pay those bills. Congress paid the claims on Harvey and Irma because they saw the impact of those on the fund. Yes, we have about $20 billion worth of debt today. I can attribute that debt entirely to those large-scale events where we paid claims with a very high proportion of discounted rates. So the people who are not paying the actuarial price for the cover. And again, that's the way Congress designed the program. So what are we doing? Part of it is we're using capital markets and doing risk transfers, so things like reinsurance and catastrophe bonds and the like, that we're moving down that road. We're also looking at our price points and making sure that we're including all of the right pricing elements. We've worked with the House. There's some extreme repetitive loss properties that we probably shouldn't be providing cover on. And so we'll keep working down that road to build out a program that is sustainable.